Run us through the sense you're making of the movements we're seeing over on the Kenyan markets at the moment, on the equity side of things, where we've had the fixed income market, the bond market, stealing a lot of attention over the past week.
Thank you very much, Alicia. That observation is very, very good because mainly we have been seeing a lot of flight to safety in our market against issues to do with corporate actions, especially in the equities market, not doing excellently well. And the corporate sector is doing very well, especially the guaranteed market like bonds as well as infrastructure bonds like the Kenyan one.
Well, certainly we've been taking our eye off the banking space over the last few weeks, and I want to bring it back to that space right now. Japheth, I mean, despite their rosy performance for 2009, we've had some analysts out there saying that there are signs of weakness that deserve more attention from the Central Bank of Kenya, from the regulators. Do you share that sentiment at all, looking at the health of the Kenyan banking space?
In my view, what I think is that it's important for us to make such an assessment, for us to sort of say, this is where we're at, this is where we want to go, and these are the structures we're supposed to have in place. Interestingly, the main counter in Kenya in the banking sector that has basically had a lot of flows from international investors has been Equity Bank. And the concern with Equity Bank at the moment is that they have exposure of 700 million Kenyan shillings on the agricultural sector. We've had issues with weather in Kenya. As much as a company will want to have, going forward, similar exposure to the agricultural sector, I think it's a cause for concern for everyone, knowing that unless they sort of take insurance on the loan book, basically it will be really hard to sort of price in what the cost of that will be. Because risk management is a key thing for any banking sector player. Then the other thing is that they've made 100% acquisition in Uganda, basically growing into other countries in the region. So it will take some money for them to like expand like that. So basically, it's hard to sort of say, let's not have a similar sort of outlook on that particular sector. With countries like Barclays, what we've seen is that they've basically differentiated their products. They've also done a proper cost-cutting operation. We've seen them taking their guys from Salesforce to a recoveries division to basically make sure that their collection rates are higher. We've seen CFC encouraging results. We've seen earnings per share going up to 32%. So basically, it's important for us to sort of make sure that we look at that sector critically.
Well, certainly there are a few players in that space really paying attention to their approach in the current market. We know that Standard Chartered, Samuel, was out with results recently, and that was really the star performer when it came to the recent set of results that were released. Let's take a look at the issue that Japheth has highlighted here, where we've got these banks really aggressively trying to pursue strengthening their customer base, but at the same time, they're looking at a possibility of rising non-performing loans. Are you satisfied with the risk mitigating strategies that these banks are putting in place in lieu of the approach that they're tackling this market with?
Well, definitely for a start, I do agree with Japheth there that some of the banks, especially Equity Bank, has been able to take advantage of the lower market segment and also to be able to take advantage of loans, especially the sector like agriculture, which has been the backbone of Kenya's economy, which at the moment is being threatened. And so banks as at now are starting to take some of the strategies to be able to cushion themselves, like being able to take securities for some of the lending, which is really necessary. But at the moment, we would call upon the Central Bank to be able to step in and encourage some of these banks, as much as they're going to lend, to be cautious and very, very cautious. And just as you observed, banks like Barclays and Standard Chartered, which have been relatively cautious in terms of their lending, have been able to ensure that their bottom line has been protected.
What levels of provisioning are we seeing from these banks, in order to mitigate against some of the risk? And is it adequate enough, in your opinion?
Well, in my opinion, some of the conservative banks like Standard Chartered, Barclays Bank, and such have been able to be very adequate in terms of their lending, mainly because of some of their clientele. They're able to get a lot of deposits, and against that, they're able to lend very cautiously. But some of the banks, for instance, Equity Bank, which has been able to more of like target the mass market and some of the lower end of the economy, they are not being able to be very cautious, especially because most of their retailers do not deposit as such.
Well, looking at the environment, you mentioned regional expansion, really a hot topic for many of these banks. And the latest in this scenario is KCB. Rwanda, it's opened 3 more branches in a bid to increase its presence and reach out to its target market in that region. What is the market actually made of that move by KCB?
I think for KCB, what they're looking at is the fact that they can basically drive productivity because of having the undersea cable. So that means they'll use technology to basically interconnect, because when you look at the banking solution, is basically like one of the top-notch technologies in the country, basically considering we coming from a very low base as Kenya. The other thing is they're looking to do 5 branches in Uganda. They're looking to do, I think, 3 of them in Burundi. And Southern Sudan as well, they're looking at 5 of them.
Yeah.
So at the end of the day, when you look at it in total, it's roughly, I think, 14 new branches. You cannot integrate across borders without technology. So I think that's the view they have.
Well, certainly they're not the only bank that's exploring the region and increasing its footprint. Kenyan banks aside, the likes of Equity Bank as well. We've got Nigerian banks making steady progress into the East African region as well. UBA is one of the recent entries into the Kenyan market space. How much of a pressure point do you see that being for Kenyan banks moving forward?
I think it will be one of the things that the Kenyan banking sector will have to, see how they will manage to survive, because the experience that a lot of countries have had is that where Nigerian banks have moved in because they basically understand the African space, especially the sub-Saharan African space, because they operate in a very hard economy. When they come in, they basically sort of revolutionize the whole market. So basically, I think it will be good for the consumers, but I also think the Kenyan banking sector has to rethink.
Well, certainly it's muscling up that has been a key concern. Samuel, final question to you. There was at one stage the prospect of consolidation in the banking sector. Very quickly, is this a prospect the sector still faces?
Well, definitely that is one of the prospects, because just as Japheth has observed, some of the banking institutions that are exploring our industry are banks which have very significant holdings as well as capital base, and some of the local banks, especially with the competitive nature of the financial markets, it calls for them to be able to consolidate. We are seeing some of the banks which do not have relatively big customer base as well as relatively big capital base not being able to be competitive in such an environment which is dynamically changing.